I want to get your take on yesterday's rally and the very slight pullback today. And again, we want to point out to the audience, we are looking at live pictures of President Trump right now in Riyadh, Saudi Arabia.
Yeah, well, Frank, yesterday was certainly a surprise. Markets are all about how things come in relative to expectations. And most on Wall Street, including us, were not expecting such a shift in the tariff side. And basically, as you talked about early in the program, is what you've seen is economists today have been reducing their recession odds. And as a result, we've seen a move up. Today's move down in the market is pretty natural overall. But I think what you've seen is this really reflection of changing recession odds.
All right, so we're seeing some changing recession odds. I think you're referring to Goldman Sachs reducing their recession odds from 45% down to 35%. I want to get to your pick for us today is communication services. What's giving you so much confidence in communication services? When you look at it, Netflix, the best performer, but there's two other very influential stocks. I'm thinking Alphabet is one of them, and that stock has actually been under quite a bit of pressure. So what's giving you so much confidence?
Sure. We've liked communication services all this year. And the reason why we like it is there's a combination of you still have the AI theme that's still in force as far as that secular theme. And we're seeing that over the earnings season in general, that companies continue to spend on AI. And then also, as you mentioned, the streaming side, you mentioned Netflix and Disney. So we're seeing that good combination of both. Not every stock you mentioned, Google's having some challenges. On the other side, Meta had a really nice day yesterday. So it's trading at a discount. Earning trends are stronger than the overall market, and technical trends are positive. Put that together, we think it's a place that will likely continue to outperform.
Keith, just 1 second. Going back to President Trump meeting with different officials, he was actually just talking to Ray Dalio just a short time ago. Again, the president meeting with a number of very prominent business officials during his Saudi state visit. We just saw the Tesla CEO, Elon Musk, there just a short time ago. Also, Lisa Su from AMD and Jensen Huang from NVIDIA. So sorry to interrupt you. I want to come back over to you. We have a big inflation report coming up later today. In your mind, what's at stake for this inflation report, if anything? Does it have market ramifications?
I mean, on the margin, if it's soft, I think the market would be happy about that. But the main story, as we've seen, over the last month, over the last week, and over the last few days, is all about tariffs, and that's going to trump the inflation report.
We also saw industrials during yesterday's rally take leadership in the market, now the best performing sector year to date. What's your view when it comes to industrials? By the way, Uber, I don't think a lot of people think of that as an industrial, but Uber, the best performer in the sector.
Yeah, so we're neutral on the sector. It's a pretty diverse sector. You have the industrials, as far as the defense sector on one side, and then you have the transports on the other. But going back to my initial comment, if you're reducing the odds of recession, then that should be positive for industrials. And then you're also seeing global stimulus from places like Germany, from China, and also, central banks cutting rates around the globe. So again, overall, we're neutral, but within the sector, I think there is some opportunity. And there's also many things that are also with this overall with the AI theme as far as cooling and things of that nature.
All right. One other question for you, Keith. What's your view when it comes to small caps? You would think that the temporary tariff reduction would be good for them, kind of a tailwind, because cost of goods could potentially go down at least for 90 days, maybe even for longer.
Yeah, I think you could have an oversold balance. We still prefer large caps. When you think about small caps, their earning trends continue to deteriorate. Interest rates are still staying somewhat higher for longer from the Fed, and they still have a lot of debt. And the economy, maybe it stabilizes and recession odds are somewhat less, but we don't see a big acceleration, which is typically needed for sustained small cap outperformance. So we would stick with large caps. Large caps also have more of the technology exposure that we like.